Absolutely, Agam. So starting off with what was the reason for this 14% steep fall that we are seeing is again the Novelis investor presentation which came out and the conference which was held in which the company's greenfield project, Bay Minette project, capital cost has been increased from about $4.1 billion now compared to about 2.5 billion it had stated earlier. So this was again a 65% increase here, which is quite a significant increase. And now one is the cost factor, another is the time factor also. So the expected timeline for the project commissioning was in the H2 of FY 2026, which is now we moved to H2 of FY 27. So project cost overrun and the time overrun. So what has led to the delay? A couple of reasons here. First was the initial plan underestimated the civil and construction requirements for the company and for the scope of this project. Again, there was detailed engineering which took place currently, which has led to this revised capex that we are seeing now. So this has resulted in overall up of the project cost. Again, seeing this, a couple of brokerage notes also came out wherein CLSA has downgraded the stock to a reduced rating, seeing the current cost and time overhang as a factor going ahead. Now moving on to Hindalco's results, if you have to look at that, so the street expectations was the company would see about a 6% decline, but contrary to the market expectations, we see about a 0.65% decline to about 52,808 crore in this quarter, while the EBITDA has seen about a 65% jump to 5,865 crore, led by the improvement in the EBITDA per ton that we are seeing. Again, EBITDA margins are more or less in the same range as compared to the market expectations at about 11.1% compared to the market expectation of about 11.6%. However, what missed the expectation was a reported profit where they expected about an 81% jump, but this is lower at about 71% jump at about 2,300 crore. But it is to be noted that this is also on the back of higher impairment loss that happened in the quarter. So this is what needs to be focused for Hindalco in today's session.
Sure. Anushi, a lot to take in, of course. While the earnings are not terribly disappointing, the fact that we've had that disappointment coming in from the Novelis corner is the reason why we are looking at a near 13% correction in Hindalco at the moment as we speak. But from there on, we move on to another company which is buzzing in volumes, and that's Technoplast, which also recently posted its third quarter earnings. Well, today, of course, it has also been doing well. In fact, it's currently trading at day's highs. Let's get in Mahima to give us an update on this one. Mahima, what can you offer to us this time?
Right, Agam. So as you rightly mentioned, its Q3 results came out yesterday post markets, and if you see, the revenue has grown over 17%, EBITDA has grown over 26%, margins have improved from 13.36 to 14.38, and net profit has grown over 48%. So good results for Technoplast. If we talk about the key highlights, the major key highlights were that pipes has had a healthy order book of 1.9 billion. They are continuously focusing on innovative and tech-oriented polymer products. The capacity utilization stands at 82%. They're also focusing on brownfield expansion in India and overseas for catering the future growth. Their LPG cylinder also has a good potential ahead on account of Pradhan Mantri Ujjwala Yojana, and they've also enhanced their annual CNG cascade manufacturing capacity by 300 cascades, and CNG cascades current order book stands at around 2 billion. So overall, a very good picture for the company. And if we talk about the stock performance, as you mentioned, it touched an intraday high of 14.5% today, and trading high in volumes as well, trading at 6.8 times its 30-day average. So good day for Technoplast overall.
Okay, thank you, Mahima, for getting us that update on Technoplast. Certainly a very, very interesting company, and well, building a significant amount of momentum in today's day of trade, up as much as 17%. And from there on, we address the final stock on our list, and that's Chemplast Sanmar, which is also in focus on account of a large trade coming through. And let's get back, Varsha, into this conversation. Varsha, what insights can you offer us on this particular counter?
So Agam, if you see Chemplast Sanmar, which is into specialty paste PVC. If you see the volumes, so volume is trading at 3.4x its 30-day average, and stock is down almost 9% in trade today. Now this is on the back of a company posting weak results. So if you see, revenue is down 25%, there is EBITDA loss followed by net loss. Now the reasons why the impact on the performance is due to further correction in PVC prices on account of dumping from China and other countries, and also slowdown in other chemicals such as your caustic soda, your hydrogen peroxide and refrigerant gases. This is due to oversupply situation in India. Also there's increase in feedstock which is impacting the performance for the company. But company is expecting boom in infrastructure and real estate sector, which is going to drive demand for PVC, and company is expecting a gradual recovery in prices and margins over 2 to 3 quarters.